The ringgit remained broadly stable against currencies of Malaysia's major trading partners in the second quarter of this year. And this was reflected in the relatively stable nominal effective exchange rate in the second quarter of this year at 0.8% depreciation. As a small and open economy, Malaysia was inevitably influenced by global developments, including shifts in market expectations regarding the direction of the US monetary policy and developments surrounding the Middle East conflict. As a small and open economy, Malaysia was inevitably influenced by these global developments, including shifts in the market expectations regarding the direction of the US monetary policy and developments surrounding the Middle East conflict. Nonetheless, despite global uncertainties, the ringgit continued to demonstrate resilience, and this is supported by strong fundamentals of the Malaysian economy and the sustained growth momentum. Additionally, the ongoing initiatives to support healthy two-way flows, such as the Qualified Resident Investor Program that we introduced last year, these have also helped underpin ringgit's resilience. On year-to-date basis, the ringgit's overall performance has remained broadly in line with the currencies of our major trading partners, reflected in relatively stable NER, as at 12 August 2026, year-to-date there was minus 1.1%. Let's move on to the banking system. The banking system continues to support economic growth. The bank's healthy capital and liquidity buffers ensure that they remain well positioned to meet the financing needs of the economy. The quality of business and household loans also remain sound, with low and stable impairment ratios. Newly restructured and rescheduled loans are also limited. It's quite small. This reflects the robust loan affordability assessments and the prudent provisioning practices by banks that has helped to preserve their loss-absorbing capacity. On aggregate, credit growth to the private non-financial sector increased to 6.4%. And this is higher than the first quarter, which was at 5.6%. And we see this increase particularly among the business segment. Corporate bonds expanded by 8.1%. Again, this is higher as compared to the first quarter at 5.9%. And this is amid the higher issuance for working capital needs. This was accompanied by stronger business loans growth at 7.2%, with sustained disbursements across business segments. Meanwhile, household loans growth remained broadly stable at 5.4% during the quarter. Last quarter was at 5.5%. Financing conditions also remain healthy, and overall, banks and DFIs continue to finance the SMEs. SME financing outstanding continued to grow by 4.2% in the second quarter of this year. And financing activity remains supported by the higher financing approvals, particularly for investment-related purposes. Approval rates continue to be sustained as banks continue to meet financing demand across all sectors of the economy, particularly in agriculture, mining and quarrying, and construction. Bank Negara Malaysia remains mindful of economic disruptions that's coming from the Middle East conflict and its impact on the SMEs. While the immediate focus is on short-term stabilization, we must not lose sight of the longer-term resilience. And to this end, we have proactively introduced the 5 billion ringgit SME Stabilization Relief Facility. We call it the SME SRF. And this fund is to assist SMEs, including the micro entrepreneurs as well, that's affected by the Middle East conflict. The facility provides working capital support for viable businesses for them to sustain operations and to navigate this period of uncertainty. To date, we have approved about 2.8 billion ringgit under this fund, benefiting more than 4,900 SME accounts. And this facility remains open for application until end of this year or until the fund is fully utilized. Meanwhile, structural enhancements in the financing ecosystem are also equally key in helping today's SMEs to weather shocks, capture new opportunities, and emerge as future domestic champions. To support this, we have introduced a 10 billion ringgit guarantee scheme delivered by the Credit Guarantee Corporation. And these schemes aims to mobilize private sector financing more effectively, focusing on key areas, including inclusion, climate, productivity, and also resilience.